All right, guys, so welcome to the Market Structure Mastery 2 course. So this course will be all about mastering the structure of the market. We know that in trading there is an underlying structure to every market. We'll quickly analyze that market in a way that we can shore up our watch list, right? We only want things on our watch list that are going to give us the most opportunities, and the more that you understand market structure, the easier it will be for you to do your technical analysis. All right. And so we will first off jump into our declarations. And remember, just when we're going through the declaration, so that the vibration, the frequency through your body is radiating the benefits of the declarations that we all say together. We're a family. We're in this together. I believe in you, and I know that you can win, and I know that you'll go off one day and be the world's greatest trader that you've always dreamed that you will be. And so this course in general, being a part of this mentorship, is not to create a student, right? We're here to create our declarations together. So declaration number 1, today I embrace abundance as my birthright. Number 2, today I elevate my prosperity consciousness. Number 3, I am attracting success through my daily actions. Number 4, I am a richly endowed expression of an opulent universe. Number 5, today I see myself experiencing greater success. Number 6, today I move from prosperity to prosperity. Number 7, I am in harmony with the natural vibration of the universe now. Number 8, there is enough. I am enough. I have enough. Number 9, I dare to prosper now. Number 10, my financial income cannot be magnetized to the energy of money. Number 12, today I open my mind to prosperity. Number 13, earning money rapidly is becoming easier for me, and I am doing honest work. Number 14, day by day I am becoming a better trader. Number 15, I trade to trade well. Number 16, I am eliminating past fears and replacing them with renewed faith in my abilities. Number 18, I am open to profitable opportunities in the market now. Number 19, today I make great trading decisions because they are made with my full consciousness. Number 20, today I totally and number 21, today I remind myself to be grateful. So just taking a moment to understand that where you are is where you're supposed to be. Understanding that everything happens on purpose, and right now you are on purpose. Understanding that the information in this training will help you tremendously along your journey, and you may look up years from now and hear the declarations coming to your mind, right? They'll just pop up and you'll be driving down the street and you say, I trade to trade well. And I'm not shy about the deliberate brainwashing that we're doing. I'm not shy about a deliberate intention in reprogramming the way that you think about your trading and about your success. What I know is that declarations send a certain vibration through your body. Our bodies change every so often, and there are videos that you can find on YouTube which experiment with water. And in this experiment, they use sound or vibrations, music, and they send a the more positive, the more affirming the words were, like I love you, the more complex the water crystal became, right? And we know that our bodies are made up of a tremendous amount of water. And so if the words I love you can elevate a water crystal to its highest state, to have it vibrating at a very high state. Imagine what these declarations are doing for your not only your body but your mind. All right, so it's very important that you do that with your full consciousness. You'll notice today, you'll notice now, you'll notice um, there's a lot of I am, right? These are all very strong words, deliberately created and intentionally designed in this training to program your mind, to get you prepared to receive information. There's a point of where we're planting seeds, all right? And it's important that in order to plant seeds, you don't just go out and toss the seeds on the ground. You have to dig a hole for the seeds to be planted. And by acknowledging that you may have some beliefs right now that are distracting you from achieving the success, these declarations, you're digging out those old beliefs that no longer serve you, and you're planting in new seeds that are going to serve your future self. So it's very important that you take the time, and if you find one that really resonates with you, just hammer that one out. All right, really hammer that one out. One of my favorites is I expect my trades to go into profit. I expect my trades. Some traders are expecting to lose, and we get what we expect. We get what we believe that we deserve, right? And so by telling yourself, I expect my trades to go into profit, you're sending a vibration, a frequency through your body to attract what it is that you say, right? And your word will not return to you void. What that means is that the words that you speak, all right, so very important that the declarations are not only said but felt. Sometimes you don't feel like saying them, right? Sometimes you don't feel the truth in it. However, each of these declarations was curated with the truth. So there's no barrier in your subconscious mind to the information that is incorporated in the declarations, right? All right, so that's a tea rant, right? We went on a tea rant. So in this training, we're going to cover a couple of topics today. We're going to cover identifying the market type, identifying market phases, excuse me, identifying the market maker trend, identifying the retail trader trend, and then of course we're going to look at some live charting. Now, let's just look at each of these of markets. What do you know right off the bat? If I come up to you and I say, hey, I got $100, what are the two types of markets? Would you be able to answer that with confidence? Would you be able to just say right off the bat, boom, bam, boom? If not, it's okay. You should be excited that you've created so far. With this information, imagine how much further you'll go, and imagine how much quicker you will get there, right? So in identifying the type of market, right? Identifying the type of market. And then also identifying the market phase. I keep saying phrases, the market phases. What phases? And that's okay. You should be excited if you do not know the phases, because that means that this is going to be something that accelerates you to the level of trading. You don't know what you don't know. And I always believe that we're one step away from achieving what we desire because of what we know, right? And if you don't know certain things, it's okay. You have an opportunity to learn. So being able to identify the quote unquote market maker trend, being able to identify what the quote unquote big banks and the financial institutions are doing. How do you do that? Can you do that? Do you know what I mean? Are you familiar? Right? Identifying the retail trader trend. Okay. Technically, we're retail traders, right? However, we have a market maker mindset. And so in understanding that we have a market maker mindset, meaning that we're coming to the market being in tune with what's really going on with the bigger picture. However, we can understand and identify what the retail traders are doing. We understand that we have a leg up, we have an edge, we have an advantage on the normal retail trader. Okay. And so identifying the market type. When we say market type, we understand that there are two types of markets. Okay. Two types of markets, and within one of those types are two types of that market type, right? And so one type of market would be a ranging market, where you have a market, well, actually I drew a trending market on the screen, so we'll start with that one. So a trending market would be identified by what? A market making, either if it's trending up or trending down. In the up instance, we have a market making higher highs and higher lows, right? If it's trending down, we have a market making, so that's one type, a trending market. The other one I already gave away, so you should know the answer, right? The other type of market is a ranging market. So what we have here is a market seemingly bouncing from zones, or bouncing from areas, or you could say bouncing from support and resistance. It's in a range. It's in a short range, or sometimes it's a wide range. However, price is not making a significant up move. It's not making a significant down move. It's just essentially consolidated, right? You'll hear that word, consolidated, within a certain range. All right. And so the two types of markets are trending and ranging. And now, understanding that trending and ranging are the two types of markets, what type of trending market can you have? You can have a market that is trending up, and you can have a market that is trending down. All right. And so in order to identify the market type, a couple things that you can do, right? You can step back from your screen. So often we're so focused on the picture right in front of us that we don't recognize that it is just a part of the big picture, right? And so by stepping back from your screen, you'll be able to see the full picture, right? Even zooming out on the market chart, sometimes people have their screen so zoomed in, you can literally only see. Let's talk about the four phases of the market, because we know that the market makes cycles. It makes human behavior possible. We're in the business of speculating on what behaviors will be exhibited, right? And because of that, it's important that we know that the phases of the market are repeatable structures. All right, repeatable structures are happening with each time you step in front of a chart. It's a repeated phase. I don't know why I keep saying phrase. It's a cyclical event. What happens in the past happens in the future. You'll hear people saying that all the time. Now, it may not happen exactly the same, right? Maybe a little bit fucking different, right? It's like, okay, well, there are different people that are in the market right now. So obviously, if different people are in the market, then it may not be the exact same. However, there's a high possibility that the overall underlying structure. So understanding the four phases of the market, understanding the overall structure visualized, right? We understand that essentially the structure of the market is this. This is the structure, right? We have phase 1, we have phase 2, we have phase 3, and we have phase 4, and then it just starts over. Now, wouldn't it be beautiful if the market just did this, right? Instead, you get things like this, right? Candles just everywhere. You know what I mean? And so if you can quickly identify, okay, which phase of the market is it in? What phase? Am I in phase one? Am I in phase two? Am I in phase four? Am I in phase three? Which phase of the market is it currently in? Not only understanding what phase it's currently in, understanding the psychology behind each phase, right? So if we have four phases, what's the first phase as far as psychology goes? And if you don't know this, it's okay. That's why this training is here. The first phase that it with this phase as it stands from a psychology standpoint. Not talking about like market accumulation. That's totally different. We're talking about pure psychology behind each movement in the phase. What's two? What's three? What's four? So the first quote unquote basing phase is simply fear. Fear is happening in a basing phase down here. Nobody knows what to do, right? And if you've heard me say it, the trick is to get into a buy people and to get into a sell trade before fearful people, right? And so if people are fearful here, then what would be demanded of you psychologically? To be courageous, right? So the first phase of the market, the psychology behind the first phase is fear. What's the psychology behind the second phase? You're going to guess, so it's okay. Euphoria. Understanding that in the market, those big bulls on people thinking, oh, this bad boy is going to go to the moon. They're experiencing euphoria, right? They're experiencing that just eyes in the sky feeling where they think that this is just going to go up forever and ever, and then they get a even bigger bullish candle, and I don't know what that was. That was not a bullish candle. And another one and another one. This happened on the ZAR this week. Major bullish candles, people just jumping on board. So what can you imagine that is? If the second phase is euphoria, what kicks in after euphoria? Greed. Greed kicks in after euphoria. And if phase 3 is resistance, why are people buying at resistance? Why are people buying up here? Why are people buying high? Because they're experiencing a residue of euphoria that's turning into greed. All right. And then what happens? Because what are we supposed to do at resistance? Are you supposed to buy at resistance? No. Why would you buy high? We're selling. And guess what that causes greedy people to do? So that's what shifts the market, right? With those large bearish candles that just take the market plummeting down because people are exiting their positions, just running for the hills, right? And so in understanding each of these psychological phases, it helps you to position yourself so that if the market is in phase 3, you're not buying, right? You're being cautious. You're saying, okay, well, currently the market is, if it breaks this level and then goes in and creates another level, right? And then it continues the phase, I'm going to pay attention. However, I'm not buying up here, right? I'm not buying in at the point of where people are greedy, right? And I'm not selling when people are fearful. So in identifying the market phases, the 4 phases of the market, phase 1, phase 2, phase 3, phase 4, knowing that those are repeatable cycles, knowing the psychology behind each phase, understanding the importance of analyzing the phase that the market that you're looking at is currently in, right? One of the other things that's going to allow you to master trend. Now, in your welcome kit, you have a moving averages template, right? It comes with 3 moving averages. And so the 200 EMA is a 200 exponential moving average. Now, what does that mean? If you're on the daily chart, the 200 moving average is giving you the average price of that market over the last 200 days. I don't know about you. I don't talk to a lot of traders, forex traders, that hold their trades for 200 days. Instagram, I asked what was the longest you guys have you ever held a trade, and I think the longest that was stated was around 3 months. Now, I'm good with math. However, I mean, I know 3 months isn't 200 days. It's 200 days would be right around 6 months and then some, right? And so if your moving average is telling you, and the market is above, the market is higher than the average price over the past 6 months, 6+ months, right? So identifying the market maker trend, or the big money trend, or the financial institution trend, knowing that their habits have a big picture mentality, right? They're using higher time frames. They're using the price over a projected period of time, right? They're not coming to it like, oh, let me look at the 15-minute chart. Oh, hey, Mr. Johnson, I looked at the 15-minute chart and it painted an engulfing candle. Should we sell it? They don't care about that, right? They're looking at the price overall. And so using the longer moving average and understanding the moving average will help you to identify the quote unquote market maker trend. Using higher time frames will help you to identify the market maker trend. Using the price will help you to identify the market maker trend, right? And so if you zoom out as far as you can zoom out on the chart and you look left to right, what is the price doing? Has it gone up, right? And so that helps you to identify what the quote unquote big money is doing, what the financial institutions are doing over time, over the bigger picture, right? And so we understand that within the market maker trend, we understand that us retail traders have a sense where we create a trend within that trend, right? We're thinking we are doing something, and we're like, oh, this should say retail trader trend. However, yeah, we're like, oh, okay, the market went down on the daily, so it's going down, right? However, on the monthly, it's been trending up for 6 months, right? So in identifying the retail trend, using the shorter moving averages that were included in the initial email, the 8 and the 22. Okay, so what does that mean? The average price over the past 8 days, if we're on a daily chart. Essentially candles, right? And that's why it's recommended to at least use the H4 or higher, because if you are looking to hold trades or you're looking to get more pips, then of course average on an hourly chart, you're seeing 8 hours. If you're using a moving average on a daily chart, you're seeing 8 days, right? And so if you're wanting to hold your trade for 4 days, do you think you should use an 8 hour or an 8-day, right? Just like going to the gym and lifting weights. Like if you eventually want to be able to curl 45 pounds to go, right? And so using the shorter moving averages will help you to identify what is recently going on, right? And then it'll help you to gauge how long you could potentially stay in that trade, the 22 days moving average. And of course, coming down to it and just using the price, right, over the past week, using the price over the past 8 days, which the moving average calculates for you. So it kind of makes it easier. Now, of course, with all that, let's look at the actual, an actual chart. Now, we have the GBP NZD weekly chart, okay? And you don't, for right now, don't put too much emphasis on identify the trend, right? Quickly identify the structure. And so if we're looking left to right, we know that the price is down, right? We also can you see the cycles, right? Can you see that this in here, right? Do you see that? And they're not perfect, of course. However, you can see. So what will we anticipate right here? Is this, what phase of the market is that in? What phase of the market are we currently in? Right? If we're looking at the bigger picture, we see that this market is going down, right? And we know that the market makes repeatable patterns. Sometimes when it's going down, you know what I mean? It does it in a way where it's not so obvious. What is the immediate opportunity, right? And so we zoom in. What is it that you want us to know? Well, this market has been going down for some time. Obviously, if this is a weekly chart, it's been going down for a long period of time. And we're going to zoom in. And we're going to look at that. Now, if you will recall, in the first market structure mastery course, we talked about how often it looks like a heartbeat. So if you're looking at what's on your screen right now, think about what a heartbeat looks like, right? You have a heartbeat that looks something like this. Right? It's not perfect. Doesn't this look like a heartbeat? Can you imagine the thump, 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 right? Can you hear the heart? And I get it, guys. This could be wonky. Can you hear this chart? What is this chart saying? Right? One, it was a super strong heartbeat, right? Boom. Right? And so all of this is relevant to you analyzing the type of market that you're currently in. When you go in, that's the highest point, this is the lowest point, this is the midpoint, so we're below the midpoint. Aha. If I get into a buy, I might want to be cautious, right? I don't want to think I'm going to take it to the moon right away, because this market has been going down, well, really, if we zoom it all the way out, for over 20 years. Okay? So, in understanding that, it's making an upward move towards the median price, if you will. It looks like it's currently in phase one. Okay, let me zoom in. Right, let me zoom in and see what exactly is going on. Aha! You still have that same structure, that same, it's like, it's just on a smaller frame. Look at this. And I would love for it to just be like that, right? We would love that. because then we could just buy here and sell here all day long. Just sell, 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 right? Sell, get as many sales as we want up here. So if I asked you, hey, what kind of trend are we in? Oh, well, it looks like it's currently in some kind of range. It's kind of in a downward range. I could take that, right? You have it pretty much in this area. It's not really making a significant higher high or making a significant higher low or making a significant lower low or lower high. So I can see that. I can see it's gotten into some sort of range in here. Right? I see that it hit this level and then fell down to this level, bounced up from this level, attempted to go back to this level, however, got stuck right here, and then it went down, and now we're currently at the same level that we bought at before. So what do you think you would want to do here? Are you convinced to sell? Are you convinced to buy? Well, and I know we said at the beginning, don't worry about, let's take into account the time frame. So we identified on the bigger picture that currently the market is in some sort of range in a sense, right? I'm just going to plot the lines on here so we can identify this clearly. It's in this sort of range. It's stuck between these levels. Now, if I wanted to trade this, right, I have a market maker, big bank idea of what's going on, right? I'm on a higher time frame. I could throw on the moving averages if I wanted to. However, I can see clearly it's at a level of support, right? I identified the level on the weekly. So I'm going to drop down to the daily and see if I can find an opportunity. And wow, come on guys, look at that. I'm just, it's so beautiful. But let's go to where we are now. Whoa, what does that look like? What does that look like? What phase of the market does it look like it's in? What phase is this? Right, this is the phase where most people are afraid. It's what we consider to be a quote-unquote basing phase. And so being courageous or being confident in this area would mean that it's a buy. Now, if you've seen the other trainings, you'll also recognize this as a textbook. Guys, this is so beautiful. A textbook M&W. You had the one pullback, you had the two pullback, you had this and this. Come on, guys. And where do we think the next level would be? Obviously, it's got calculations. Of course, we don't know, right? I would love to say 100%, yeah, it's definitely going to run up here. It's definitely going to do that. We expect that based on where the market is currently, that after this nice pullback, look at this, it has the potential to at least go to here. If it really wants to make everybody in the world happy, it'll go all the way back up to where it came from. And this took it, this was May, and this is today's candle, is the 2nd of August. So you're looking at 3 months. Could we be looking at 3 months of rise? Well, perhaps, right? Perhaps that when it came up from this level, how many weeks of rise was that? 20 weeks of rise. Remember, you'll recall the longest time that someone said that they held a trade was 3 months. 12 weeks and 3 months, 20 weeks. Can you imagine putting in a buy and just walking away from it? Right? And so that's the power of knowing the structure of the market and knowing, okay, well, one, if we're looking at common patterns and all of that, we're looking at what some would consider to be a double bottom currently. With it being a double bottom, if we're looking at our best entry, of course, if you haven't gone through that training, we'll touch on that right now. Understanding where we got the signal to enter is crucial so that we're getting in at the right spot, right? We got a signal on this candle, and the market today technically went above that area. Now, I'm not saying it's too late to get in, right? I'm saying that if you're going to enter this, you want to understand what exactly is going on here, right? You want to understand that, okay, if I want to enter, I'm not that far off. I'm not that far off from where I would get an extraordinary entry. And we do recognize that in this area as well, that the market needs to get a little bit of momentum to go through that level, because we see the size of this candle. This one candle took out, whoa, my bad, took out almost a week of trading. Well, actually, I mean, if you count these were just going sideways. So literally one candle, boom, shot it down. And this quick move is normally the fake move, right? We know that. We know that the quick move is normally the fake move. The move that's like long and drawn out, that's a real move. That's the market maker trend from up here, right? I'm gonna measure how many pips this is. This is the benefit that you have with trading the chart based on pure price action, not relying on any indicators. You can clearly see what's going on. You clearly see, okay, one up move, another up attempt, double bottom. And even if, let's just say, even if this market decided to do a triple bottom, right? Where would you put your stop loss? Where would you enter? Okay, we see here where this is the lowest, this is a swing low, right? And we know that the market maintained again, it stayed above this level, right? And so this is your swing low. And so what you could potentially see is the market, and I want to use blue so we can see it. You could potentially see something like this, right? You could potentially see that. Keep in mind, on the weekly chart, this is what it looked like. And so we know with our quote unquote W formation, right, we kind of have that, and it could bring it down again and then take it up, right? We don't know. All we know is that if it's in phase one, we're not inclined to sell, right? We're not inclined to sell just yet. We need the market to tell us what it wants us to know and if selling is a good idea. Right? So let's recap, because once you know these ideas, once they're ingrained in your mind, once you have it down to the T, no pun intended, once you have it down, that, right? So understanding that there are two types of markets. What are the two types of markets? Well, the first, or they're not in any particular order, the one type of market is a trending market, a market that is making a swing from higher to lower, right? Or lower to higher, however you want to say it. Higher to lower sounds interesting. Both of them actually sound interesting. Making a swing, right? Going up. Or a ranging market. It's not really going anywhere. That's the second type of market, right? So we have two types, trend, I erased trend, but you know what I mean. Let's get that back up there, bub. Trending market, bub. All right. So in knowing that there is a trending market type and then there is a ranging market, what are the two types of trending markets? You should know these. These should immediately pop into your mind. If I say, what are the two types of trending markets? You should know automatically. You shouldn't have to think about it. And like I said at the beginning, if you don't know, that's okay. That's why this training is here, so that you can learn it. And then you'll repeat learning it over and over and over again, right? Now that you know it, you just gotta hammer it in your mind. Okay, two types of markets, trending and ranging. Trending markets, an uptrend and a downtrend. Uptrend, downtrend. Got it. Two market types, trending, ranging. Two types of trending markets. Uptrend, downtrend. Got it. What's another word for a ranging market? What's another word for a ranging market? What's another word for a ranging market? Consolidated. Got it. Right? These are things that we must know. These are things that should just radiate in your mind all times. What kind of market is the GBP NZD in? Oh, well, it's been trending bearish about 20 years. And that's not just something fancy to say at a coffee party or whatever. Coffee party. At a cocktail party. Apparently I like coffee over cocktails. Alright, it's not just something fancy to say, oh yeah, the GBP NZD, that Great British Pound, New Zealand dollar has been trending down for roughly 17,000 months, right? It's not just something cool to say, it's what's going on. So the more that you know these things, the better equipped you are to make the most profitable decisions, right? Opening your mind to profitable opportunities. The more confidence that you have in identifying the trend, the more confidence that you have in identifying the cycle, the type of market, the structure of the market, the better off you will be in assessing opportunities, right? Because it comes down to a decision. And literally, one of the best things about trading is we only have two decisions. You only have two decisions that you can choose from. You only have two decisions. Are you going to buy? Well, technically you have three, right? Are you going to buy? Are you going to sell? Or are you going to stay on the sideline? Are you going to wait? Right? So technically you do have three decisions. When you've eliminated that you're not going to stay on the sideline, you're left with two decisions. Is this the time to buy or is this the time to sell? And if you're buying, who are you buying from? Are you buying from retail traders? Fantastic. Are you buying from market makers? Slow it down. Right? Because you got to have long pockets to buy from money from market makers. Right? We're talking about these financial institutions that literally can trade 100 million at the drop of a dime. That literally have drawdown of 250,000. Right? Instantly drawdown 250,000. Some of us have drawdown of $250 and we're beating ourselves up, right? And I'm not saying there's anything wrong with it. I'm not saying there's anything better or worse. I'm just saying if you're going to be buying, understand who you're buying from. Or who are you buying with is an even better question. Who are you buying with, right? Are you buying with or are you buying with the shorter term trend, the retail trend? I'm going to get into a buy right here. I'm going to get into a buy right here. Smacked. The smackdown was laid, right? So who are you buying from? Who are you buying from? Types of markets, understanding that in those types of markets, we have a trending market, we have a ranging market, aka a consolidated market. We know that we have two types of markets. We know that in trending markets, there are two types of trending markets. We know that there's a bullish trending market and a bearish trending market. We know that in a bullish trending market, it's making higher highs, higher lows. We know that in a bearish trending market, it's making lower lows, lower highs, right? And in knowing that, we're taking it a step further and saying, okay, now that I know the type of market, what's the what phase is the market in? Right? Are we in a phase where I should be buying, or are we in a phase where selling is better? Cycle here. You can see it. And when you train your eye to see this cycle, your trading is going to take on a new level. You have no idea how exciting it will be for you to come to a market and see it so plainly and so clear. Just like seeing this market so plainly and so clear and saying, oh man, looks like it's in phase one. Looks like it's in phase one. You have no idea how much your trading is going to change. Now this phase two was funky, right? Still a phase two. It was a funky, swinging, wide phase two. Took a lot of euphoria to get this up here. People were, hey, oh, hey, oh, hey, oh, right? Think about how you would feel coming to this market. Let me just say, coming to this market, having your support and resistance on here, seeing that this market had successfully completed phase four, right? Phase three up here. You can say it started up here in this area, dropped down, came out of phase one with a swinging vengeance, went up, right? What are you doing here? Are you buying or are you selling? Well, I don't know, T. I think I should be looking at a sell. Okay, well, let's see. That probably would have scared you, that one. Oh. Okay. Oh, here we go. Ready to go? Yes. That one probably would have scared you too. Woo. That probably would have scared you too. That one? Yep. Oh, okay. Okay, we back in there. Yeah, I knew that was just a fake out. Okay, we're back in there. Oh, wait a second. Wait a second. Oh no, wait a second. It's reaching that same level. Whoa. It touched the same exact level. Do you see this? Tell me that you don't think that this happened on accident. Touch the exact same level. It's not a game. It's not a drill, guys. It's touched this exact same level. Came down right here. Boom. Touch this. Came down right here. Boom. Touch the same freaking level. So why were you afraid to buy right here? Why were you afraid? I understand. Look at what it did over here. The exact same thing. Look at it closely. I'm gonna zoom in. Came down, went up, smacked it down to this level, went up. You see this, right? You see this. W, bam. So what should we expect? Came up, smacked it down, and we should expect it to continue, right? We should expect it to continue. So understanding the four phases of the market, understanding what phase you're currently in, understanding that if you're in phase one, You don't necessarily want to be selling in phase one. You want to be brave, right? You want to know, oh, that mug is going up. Boom, I'm buying. I don't give a fuck. I'm buying, right? Buying in phase three. Should you buy in phase three? Should you buy in phase three? Should you execute a buy in phase three? Where is phase three? If I drew this on if I drew this on a sheet of paper, we were at a restaurant, I drew this on the table, where's phase three? Where is it? What does it mean? What kind of psychological impact is happening in phase three? You're gonna say, okay, T, I got this, bruh. Phase three, that's right here. Boom, bam, ping, pang, boom. This is where greed kicks in. Boom. This is where I should be selling. Bam. Because people are gonna panic in stage four, T. I know this stuff. And then what's gonna happen? It's gonna start all over, T. You got it. You got it, homie. It's gonna start all over. It's a cycle. It's a repeatable pattern that happens time and time and time and time again, where this is the way we ball. I know that was corny. I didn't have another way to wrap this video up. This is the way we ball, and we like to floss. Anyway, so yes, you have completed the Market Structure Mastery 2. Make sure you go back and watch this over and over again. Guys, really just get obsessed with this material. Get obsessed with right. The more moments you can be like, ha, I think they slick. They threw a W as support. I'm buying that hoe. Right? Somebody might be offended by the word hoe. So anyway, um it's a Okay, welcome to this video. We will be discussing and going through all of these pairs to 3891. All right, and then we're going to drop down and we can see, let's see here. So this level was touched here, and it was also a reversal point from here. So we'll draw that in. And once we get to the end of the pairs, we're going to really see how these levels will play out not in history, but in the future. Okay, so we can see here the market fell to this level, popped up, and it came to this level and reversed. Now, some technical analysis traders may find that putting this level here is more beneficial, or they may want to add that in. Understand always that these pivot levels are swinging levels, and based on this area, this would be more relevant because we could see where when the market fell below here and went higher. Okay, and so we may also look at this area as the same thing where the market touched here. Okay, it reversed from this level. Okay, so we'll put one there. Okay, and we will move right along. Okay, and so looking here, the market rejected. So we can see where the market fell all the way down to this level, bounced up, stalled here, reversed, and then it became relevant there. So we're going to put a level there as well. Okay, so I have a level here where this could really be a swinging scale, but to compensate for the fact that the market came to here and it also reversed from here, we'll put this level here to split the difference. And in a compound area like that, you see where we're using the chart to give us the most relevant area, right? So we have technically 1, 2, 3, 4 tabs. Alternatively, if we were to put it here, it would technically be 2 tabs. Okay, so we're just going to keep going. Now, in some cases, it is relevant to look at when you have a large swing, right? So if this is considered to be a large swing depending on the pips or the movement, sometimes it is good to pay attention to that. But we're just going to keep moving forward with look market popped up from here and came back down, and then when it reversed, it went through that level and then did a bit of a reversal. So this is also a level. One of the things that I want to note while we're going through this is that Renko does not take time into the equation. And for that reason, it is important to under 21st. So these bricks don't represent a day, even though we're on the daily chart. So just keep that in mind as we're going through here. So this would be a level. I can see where the market bounced up to this and then reversed. This will more than likely be a 3-part series. Okay, so came up to here, came down to here. Okay, which because we had a bit of a reversal off of this level, we'll put that, but it did double tap here, so we'll put that level in. Is obviously pretty powerful here, so we understand that. And again, just noticing that we operate on a swinging scale, then this could be already a level of interest. Now, the good thing about these levels is once you have them on here, you don't have to redraw them. You know what I mean? So this could in the future be an important level. So it really just depends on how from here to here, reversed from here, came back down, popped up. And so this is definitely a level that we want to have on our chart. Now for the remaining levels, I may not do as much talking depending on the currency or the commodity, but we'll continue to go through this together. Okay, so this level here, consider where we have, it's literally one box, and so we'll just put it here.
training, I've just been just running, just doing my exercises, a lot of shadow boxing, heavy bag work, just trying to get back into the flow of things. And then of course I'm gonna go back to my trainer. But other than that, really just been focusing on just working, trying to get money. Um and now that I'm dabbling in this forex, I'm trying to learn more. I'm trying to get on your level with this forex stuff. I know it's gonna take some time, but I'm willing to grow. You know what I mean?
Hey, I appreciate that. I appreciate that. And really, my goal, just to let you know, is to get you to your level. So whatever that means, we're gonna get you there. I've helped that's time, but mostly online. So a lot of my students are online, all countries, all continents. You know what I mean? It's so my goal as a educator is to draw it out of you. You have a natural ability to see the market a certain way. And so the way that I do my one-on-one coaching is designed to foster what you see. Because there's so many different ways to trade. I know you've been diving into the candlestick Bible, you've been diving into M&Ws, pin, pin bar, inside bar. There's so many different ways. But once we find your way, all you got to do is just, you know what I mean, keep that going. So, like, for instance, boxing, that's your sport. You know what I mean? So, you're going to have your conditioning, your trainer, everything that you need to be successful, same way. So, but as always, I appreciate you because we'll get you there financially. The main thing is if we could teach you how to be a great trader, the money that just happens, right? So,
But
M&Ws. Tell me where we are with that. I'm going to switch this to a candlestick so we can really talk about this chart too, so we can see it because I want to see what you see. Let me get this pulled up. Can you see the candles, the trading view? Let me
yeah, I'm
see.
trading view on my computer right here.
Okay, perfect. Okay. Well, why don't you share your screen? How about that, my friend? Share your screen. You train the trainer for a second. I'm gonna stop presenting. Or are we on your phone?
So it actually might be better on your screen because I would
Okay.
have
What?
to. Let me see if I can turn this around. Let me see. Hang on.
Unless you can tap into the link from your
Can
email, just
you see
connect
that?
to the meeting from your email.
Can you see that? You
Yeah,
said
I can see
connected.
it.
Hang on. Okay. So actually, I was looking at this today, the Euro and USD.
Euro USD. Okay, I'm gonna pull it up on mine that we can talk to it together. So talk to me about what you've been seeing on that pair. What caught your attention? What has your eye?
Okay, so to be honest, it was really irking me today because because it was like it just looks so messy,
Mm,
you know? It looks so messy to me whenever I cuz like at first this is what I was doing. I was going to the day, right?
pulling it up right now. Oh no, this is a different one that it's showing. Give me 1 second, friend. My bad. I have two separate windows open with the chart, so it's not showing that one. Where's the other one showing? But I'm still listening though. Go ahead, go ahead. You were saying so it was being kind of finicky. I don't like trading pairs when they're being finicky. So I'm like you. If it's acting weird, I'm not playing. I'm not playing the game.
Yeah, so to be honest, here's my thing. From reading the Candlestick Bible, the first thing that it was saying was you want to be able to determine the market trend or if it's moving horizontally, and if it's moving horizontally, there's potential for the market to be choppy, and you don't want to trade when the market is choppy. I mean, you can, but it's risky, right?
Right, right. So when the market is going sideways, consolidation, or horizontally, then you want to avoid trading or looking for those swing trades because basically the market is just bouncing up and down between support and resistance. So I had that on Renko, but let's say for instance we switch it to candlesticks. So like technically these 2 days are consolidated, and I can tell that on the daily chart. I'm on a daily. I can tell that these 2 days are consolidated. The reason I can tell is just looking at the candlestick anatomy. The highs are pretty similar, the lows, and I know this is the current day. Of course, this isn't. So just by taking that look at it, if I were to put a box around this and drill it down to a smaller time frame, watch, it's you'll really be able to see the consolidation. I'm just going to put a line between here, and technically it's going to catch some of this, but we'll focus on the green area. So I'm going to switch it to an hour, and you'll start to see. You see how these candles are consolidating.
Mm-hmm.
On the hour chart, of course, there's more information. Um, so yeah, I see what you mean. It's just kind of been going, and then it fell, and it came back up and retested that area. You see, I actually retested it twice. So these are liquidity grabs. When you see the market move in those vicious directions, I like to call them, where you have those wicks and it moves fast, that's
Mm-hmm.
where the market is basically looking for more money. Who's got the money? That's the question. At the end of the day, they're on both sides of the trades. They're just going to try to get the bag the fastest. So if mama got the money and daddy got the money, who going to give me the money the fastest? Mama? Okay, let me go over to mama. That's the sell, right? I'm going to get that sell bag. Okay, well, dad also got that bag. He said, okay, let me go over to dad. I'm going to get that bag too. So that's the buy bag, right? That's all they're doing every single day is going from mommy to daddy, extracting the money. And so people get caught up in trying to predict. But yeah, I'm glad you said, hey, if they choppy, I'm not with it. I
So
don't
my issue was that, okay, you know how you draw your margins? You have your two red lines, right? Your bars. I couldn't like because you got your high, first of all, I couldn't really determine what the market was doing because I was having problems with TradingView because it's like I'm kind of new to TradingView, so I was trying to
okay.
like I figure out how to work with this, but I was trying to determine if it was in a uptrend or a downtrend, like what is it doing? And from what I could
Okay.
see, going up, and now it looks like the markets is on a downtrend, right?
Well, let me ask you this because one of the tools that I use to help to identify the trend is Renko. Okay, so I'm going to switch it to a Renko chart, and then you can tell me if you think it's in an up or down trend. Okay, so depending on the level of subscription with TradingView, you can access Renko. This for identifying the trend, not yet trading it. You know what I mean? Because there are a couple intricacies. So let's say, for instance, we were to come into TradingView. This is a free software. Of course, the Renko is built in, right? You come here, it's still the same conversation. This market is technically in a consolidated area. Now it's a wide consolidation. You know what I mean? This consolidation could be, I mean, that's hundreds, thousands, if not of pips in that range. So there's movement to be able to grab that, but then that's driller direction, right? Versus something like, let's just say, if we were to zoom out, mm, well, even if let's just say you came to the market and you saw this, right? That's a clear up uptrend. So if you were to come in on these days, you could have saw that this was previously climbing up. Right now, it's just consolidated, like you said. Not saying that there aren't opportunities to trade it on a shorter time frame, but that means more trade management, being more on the chart. So it just kind of depends on your time commitment. You know what I mean?
Okay, and so you come so that actually makes me feel a lot better because I was like, man, because like okay, from reading the Candlestick Bible, it taught me to determine where the market is moving up or down or sideways or what it's doing, and I determined that it was like you said in consolidation. So really there was not much to do here. You could still, what I've learned today is you could still catch a little some plays off of some of the smaller time frames, but again, I would much rather be able to observe a downtrend or uptrend and then catch a breakout, get a good entry point
of June, and I'll be in Arkansas too. So I will definitely when I come, we should connect because I'll be there towards the end of the month next month. But we'll stay in touch so that you know. But then too, man, I was gonna tell you, I've been working on my cardio, so it's up with my cardio. Hopefully, I'll be ready to get in the ring. We'll see.
Okay. And I'm looking. Nah, you ain't fooling me. I know you stay ready. Okay. So you sent me another link?
Yeah, let me what I'll do is I'll just drop it into your email right now. We'll just do that and then let me do this real quick. And then we'll just send a new link. Or say I mean the same link, but yeah, when you click it it'll bring you into this medium, but on your laptop. Here, I got you 1 second. Give me 1 second. Okay. All right, so it has a subject meeting.
Okay.
You got
Oh,
some good music for me? What you got? What you been listening to lately?
non non so I think it's Sofrigio frequencies.
Hmm.
I've been listening to actually just a lot, just staying away. Cause like even in the gym, one thing I realize is like whenever it does come down to it, there ain't no music playing.
Mhm.
You know,
Yeah. 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 Yeah.
mine like more towards it. So I really ain't got no new music for you. I don't.
Well, it doesn't have to be music. I'm on that too, though. You know what I mean? I listen to a lot of binaural beats. I mean, especially during workout. There's one that I have it's just especially for sports training and muscle endurance. So those frequencies. So that's what I'm on too. Or
Oh,
instrumental.
you put me up on something. Yeah, send me that. I need that.
Yeah. Yeah. We of course we're always vibing there because I'm more on a mental diet where I'm limiting certain information that I'm taking in. Just see what happens, right? Is this it? It says Kane, last name. Is
Yeah,
that
this is
right?
my
Okay, okay, okay.
this is
All good. We good. We good.
that's one little man hustler. 12
Oh
hours
yeah.
every day. I'll be like, man, still in school and I think in nursing school and stuff. And then she been working on the trading too. Shoot, she called me excited talking about she made about $100 trading.
Hey, yeah, and that's what it's about, man. I mean, because think about it. Even if you get to a position of where, and I get it, we know the market isn't technically open 30 days, but even if you can earn $100 every time you sit down at the market, that's a start. And then you use that to reinvest. You know what I mean? So let's just say you trade 20 days in a month, that's 2 grand. Next month you do the same thing. You don't take any withdrawals. I mean, some people get so excited they see that money stacking up, they start withdrawing it out. It's like you can do that, but at the same time, let's run it up again. Let's see how we can duplicate that same success over and over so that you put yourself in a position so when you do withdraw, those withdrawals are insignificant versus those profits that you're making. So I always tell people $10 turns into $100 a day, turns into $1,000, turns into 10,000, turns into 100,000. So
Yeah.
zeros, energy. Okay, so it should give you the option to present.
Okay. Let me see. I'm gonna hang up this phone.
Okay, yeah.
Okay, can you hear me? Okay. He said it should give me the option to present. Let me find it. Okay, present now. Yeah. Uh
Okay. Okay. So you said you was trying to get your chart set up for the higher time frames or something?
Um, yeah, so pretty much I was just trying to set my bars, my margins, I guess basically support resistance.
Okay. Support and resistance. Okay. So a couple of things to note about support and resistance. One of the things is to identify pivot points. On your chart, you see where it says indicators at the top?
Yeah.
Right. To the left of that, you see that candlestick. Click on that.
Hang on a second.
And not the part with the little squiggly, but a little bit over where the candlesticks are. When you click on that, it should open up multiple chart types.
Okay, I'm trying to actually see how to. Oh, interesting. Okay, I guess I have to switch over.
Okay.
Whoa. No, okay, so now you said to click on the
Yes,
candlestick.
yes, sir. So you'll see where it says line, put a star on where it says
Hmm.
line, just star that one. Like how you can you see that star, just hit that so that you can easily get back to
Yeah.
that one, favorite that one. And then also look for Rinko, because Rinko should be on there as well. I can't see it from my side, but it looks like the platform is covering it. Yeah, there it is. Okay, so Rinko, star that one too.
Oh, you see it? Let me see.
Yeah, it's under
Rinko.
Hike and Ashy. It's under yeah, yeah,
Oh, okay,
yeah,
I
that
see
one.
it. Wow,
Hmm.
it was right in front of me. If it was a snake, it would have bit me, right?
All good. No worries, bro. No worries. So what I want you
Oh,
to do, just hit, yeah, just and then double click on the price. Yeah, you can. Are you familiar with navigating? Like if you double click over there, it'll automatically resize. It'll automatically resize it. Or if not, you can
no,
drag
see,
it.
I
You
this
know what I
is
mean?
my this is I'm like this, right? Yeah.
Yep. Yeah. Just try to drag it all the way down. Support and resistance. What we want to do is we want to start with where is the highest point and where is the lowest point. So the reason I like to use Renko to determine that is because it does smooth out the market for you. So with that top blue line, you can pull
Mhm.
it down a little bit more to line it up. Now keep in mind with these levels, they're flexible. So we don't want to get attached to them. We just want to say that these are areas where, so that's what these levels are. So we don't want to put all our ducats on it like, oh, this is support and it's always going to be, because sometimes the market blows through these levels. But with that being said, you can left side, where you see where the on the very left where the crosshair is. When you start to go down through those, the second, let's see, where is your line? Yeah, go to that. Yeah, go to the slanted line again, and then hover over where it said trend line. Hover over the right and see what other line options you have. Because that's where mine is. Mine is right there. Okay, so there you go. Yeah. Okay, so
Okay.
your vertical, yep, vertical line, horizontal line, whatever you need. And then you can start at kind of like you did. It looks like you already have the other one started, but you can start out when you go back in there, just in case to make it easier to. And
Okay.
it should just
Where's the
drop it whenever you
horizontal
click. It
line?
should just add it.
Oh, okay,
So I
okay,
just,
okay, cool.
yep, yep.
Oh,
hmm
that's dope. So
So
we're
here's what I
going
want
right
you to do,
here. I
friend.
would
This is what
say,
I want you to do. Get the middle on there.
okay.
Okay. All right. Now, what I want you to do is this. I want you to right click.
Oh, okay. Right click,
hmm And I want you to hit remove drawings.
remove drawings.
Now we're going to do the
Okay.
same thing we just did again. So let's do it again. So let's put them on there fresh. Just to get your reps in, but getting comfortable with that tool. So you're just going to go back in, add that fresh line. So highest level, where's the lowest level within that screen. You don't have you can scroll out and see the big picture, or we can focus on an area. So let's say boom, within this area, where is the highest, where is the lowest? So we're just going to do that same thing based on what you can
Right
see.
there.
Yeah, perfect,
Mm,
perfect.
right. Oh, I guess I have to go back and let me see. Trend
hmm
line.
Perfect.
Okay. Mm. You want me to do another middle too as well,
Yep.
right?
Through the middle. Yep.
Okay.
Perfect. So that's a comfortability thing. When we have downtime, you just want to practice throwing those lines on there so you can understand how that platform works. Because once you learn the platform, that's some people's obstacle with getting started with trading. They're totally intimidated by the platform. I know you're not, but some people see this and they're like, ah. But boom. So we have our high point. For real. We got our high, low, and middle. So what we're going to do is the same thing within those ranges. So now that if we split this market in half, I already have that point. I'm going to throw a middle line in between that, right? And then I'm going to throw a middle line in between the half point and the lowest point. Does that make sense? So technically, you're gonna quarter it off. So we're gonna go halfway through. We'll throw in. Mhm.
Oh, so you want me to draw another line?
Yeah, so we're going to do two more lines, and those lines are going to go halfway between the halfway to the bottom, and you're going to go halfway between the halfway to the top. So we're looking for halfway points between these levels that we just determined within our scope. This is the highest of all time within the scope. This is the lowest of all. Okay, based on that, this is halfway. This is halfway from that. Okay, and
Is
technically,
that
in this
okay? That one
instance,
right there, okay?
I would probably scoot it up a little bit, just to meet that. Yeah, like right in there, a little bit under that one. So what you do is to click on that line, and then you'll be able to. It'll have that little box where you can move it. Yeah, you see that? So that box means you can move it. Yeah,
Oh, okay,
drag
cool.
either of those up to the top.
You said half.
Boom. That's like perfect. That's like perfect. Exactly where you put it was right on the money. So technically, with we know that because where's the market right now? You tell me, based on this market, where is it right now?
Like, what do you mean? Like, is it going
Like,
up or
where's the
down, or what are you
price?
trying to
Yeah,
say?
like where are we? Where's the price of this market right now, based on the levels that we drew in relationship to the levels? Where are right? But what would you say? Where's the price? Like, so we did a halfway to the top. Are we halfway to the top? Are we halfway to the bottom? Where are we in that grand scheme of the structure of the market that we just drilled down?
It looks like we're about to be halfway. Yeah, it looks like it's in like it's about to touch halfway to the top.
So what the reason I'm saying this is even though we went down and we drilled down to the halfway point to the lowest point, technically right now that's not
Mm-hmm.
relevant, right? So wherever the market is, that those are our relevant levels. So that was where I was going with that. So now that you know where the market is, now you can drill down, you can zoom into that a little bit more and say, well, technically, if I look left to right, the market is right back where it was before. Got it. But now, because we have this market sectioned off, you can drill down, use your candlestick Bible, those concepts to make this market make even more sense. Based on the Renko, it looks like it wants to go up, but then at the same time, it looks like until it gets over that 1.0, yeah, exactly. That's where it's gonna It could go either way. It could go up, it could go down. It can, you know what I mean? It could bounce around. So from here, these levels, this is how I would start with the market if I wanted to identify support and resistance, if I wanted to identify a trend. So we're just going to go to a different pair. Go to USD CAD. It's right under, it looks like it's right under, it's the last one that you can see on your watch list on the right side.
Oh,
Yeah, so you got US, yeah, boom, hit that one. Okay. So
okay.
now you see how these markets consolidate, but similar behavior. So if you were to want to drill this market
Mhm.
down to say what's the median, now we see that the market is pretty close to the top level. So based on prior activity, and this is actually a fantastic setup, and we'll talk about why in just a second. But based on past activity, if this market doesn't break, because a lot of people are anticipating that it could, a lot of people are anticipating that it could. If it doesn't break, chances are it'll return to a familiar area. Okay. And so now that we have that boxed off, if it ran up to here, what goes to translate, depending on the pair, that could translate to 25 pips, 50 pips, 100 pips. That's why when you sent me those trades, I was like, I love your eye. We just got to make sure we're maximizing those trading opportunities. You know what I mean? Because if you can see it, that's the hardest part, is being able to see it. Now that I know you can see it, oh, boom. Now we need to go for those moves that make it make sense, right? So 25 pips is great, but then when you talk this same amount of trading, if not less amount of trading, that's what we want to do, right? Because the less times that we're in the market, the less exposed that we are. Now, the reason I said this one is interesting is because Renko, one of my edges is trading Renko reversal and continuation patterns. And so I'm going to present real quick just so I can show you what that means. Go ahead and switch the candlesticks, switch it back to candlesticks from Renko. But when you're going through on your pairs, if you're wanting to say, okay, what direction is this on? You can use Renko. And then if you're like, okay, where are my levels, support and resistance? Use Renko. So if you close that out, when you go, so yep, right there. That's it. Well, next to it, my bad. The arrow down. Perfect. And of course, you can
Wrinkles
customize
cool. I
if you
like
want.
wrinkles.
Yeah, I love it because it smooths it all out. You can customize your chart if you want it to look a certain way, if you want the candles to be a certain way. There, I do a little bit of color psychology with some clients, depending on where they are in their trading. Some people prefer a cleaner chart, but it just really depends on you. We can always set it up the way that you want. But let me show you this go that I was working on is this idea of continuation patterns and reversal patterns. And so what I would do, because I use TradingView to track some of my trading ideas, where if I'm planning a trade, I'm over here trying to click on the presentation, I need to be on the chart. Where if I'm planning a trade, I'll come in here and use their tools to map out that trade. So let me pull up, for instance, some of the trades that we had. So come in here, like for instance, May 18th, this was just a trading idea that I generated based on Renko. We can see how it's performing. I really okay, so it's already up here. This was the entry, and this is where the market is now. So it doesn't, I guess, doesn't suck. Okay, boom, whatever. But this is tracking this mad scientist mode that I went in with Renko. Continuation and reversal. Let me show you what that looks like. Go to just a different pair that I don't typically trade. Let me see. Okay, so the reversal pattern is pretty obvious. So with the reversal pattern, what happens is I've noticed the market has a tendency to do this 3 candle situation and then give you an opportunity to enter a sell potentially here and take it down to
Mhm.
wherever it came from, right? So on this is the New Zealand US dollar. These boxes are automatically calculated by the average price or the average true range of the price. And so these boxes technically represent about, right now, it looks like these are representing 55 pips. Okay. And this, if these are 50 pip boxes, you just did 100 pips, right? So if you're risking, let's say you're risking your position size is actually I won't even do the math. I'll bring it up, but depending on what your position size is, those 100 pips that you grab, I mean, that's an easier strategy versus being like, okay, let me go to the 1 minute. And I get it, different strategies. But with this, the reversal is simply okay, you're on a sell, and then maybe we risk one box to grab two. Very simple, locked in risk. It's not a lot to think about. Works on the opposite side, right? So we say, okay, well, the market was going down. It set up that reversal pattern, gave us our entry on a buy right here. Our goal, let's say we risk one box to get two. These are bricks. We risk one brick to get and now, so I don't want to make it seem like this is outright tradable, because there are intricacies to trading this. But at the same time, it helps to plan your timing on when you're getting into your trades. So let's say, for instance, you came to the market and you saw this reversal pattern and you said, okay, I'm pretty confident it's going to go down. Once you get your trigger candle for it going down, boom, you're in the trade, versus being like, okay, going up. It's been going up for the last da 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 da. It's going to keep going up. Oh, this painted. The wiser Renko trader said, "Oh no, I'm going to wait." Boom, I sold it. So it just happens over and over, and that's why it makes it a little bit easier to plan the market. Now the reversal, a little bit of what was happening with USD CAD was where you'll see the market when it runs up a significant number of boxes. The medium qualifier is 3 boxes, and it pulls back, and then it continues. There's a tendency for that market to continue. Now, this is a little bit more complex, where once it got here, it continued, it used that level, same exact level, your entry level, as support, bounced up from it twice. It did that twice. So this level would have been tested twice. Got your entry. That could have also been multiple entries. You could have got in here, took the 2 bricks because you risked one, waited, got in again. So again, the reversal is simply when the market has preceding bricks like this, paints a reversal, gives us a continuation brick. Ideally, 2 to 3 bricks is the target, risking 1 brick. But yeah, and then that happens over and over. And oh, for you, my friend, M&Ws on this, very clear. You know what I mean? Let me, like, when you go to, oh, I'm over here. I need to be over here. That's why it's looking like that.
Oh, and I see them, the M's and the W's.
You see what I'm saying? Like, boom, right here. This more, and even this could have initially it could have just went, right? But then it came back up, played with you a little bit, and then after it came back over. Now, keep in mind with Renko, this is not taking time into account. So these are not daily bricks. This is April the 23rd. And this is going back to 2018. April 23rd, April 25th. So the bricks paint as the movement occurs. But yeah, I think even with M&Ws, it's just it paints those a lot clearer. See, look at this macro. That's big money. Big money M. You know what I'm saying? That's a
Wow,
big money
and
M.
you're using that same program that you had me put in. What is it called again? I forgot.
Program.
Like the pattern, the way you got your patterns, because those are not
Oh,
candlesticks.
Renko. Right. Yeah. This is a Renko chart. Yeah. So sometimes when you're playing around, just TradingView platform. So let's say I was just kind of see if we can see one, but I mean, you can see it like this situation when it did pop off, when it got above that I don't know if you call it a peak or whatever you call it on W, but when it got above that, it was like shoom. Use that same area right here, shoom. The more comfortable that you get with these levels, the more you'll start to notice how the market is going to be drawn to them and repel from them. It's no different, law of attraction. So let me just pick up different.
Setting it up the way that you showed me, right? Pretty much just setting it up to I guess I would call it like the 4 bars, 4 squares. I don't know. You know, the way that you set it up, halfway to the bottom, halfway to the top. Yeah.
Okay. Yeah. So you're doing that to identify the direction of the market. So when you come into the view, and you can do that with the line chart, it smooths it out. So it makes it a lot difficult. Well, it makes it a little bit more difficult. So boom, let's say for instance, we could just clear this off because I don't need it. So if we're doing the same philosophy on candlestick, oh my God, I love seeing stuff like this. I wish I would have been in on that because so this right here, this is an engulfing candle pattern. Oh my gosh, look at this drop.
Oh yeah.
Beautiful. Mm, mm. You got to see
Mm-hmm.
this engulfing candle. Like I was telling you, you only need one pattern to be successful. And the way that I teach people to enter, three different ways to enter. If you if you use an aggressive entry, capitalizing that full day is not something that's unfamiliar. Like literally, I can show you. So we're in USDZAR right now. We got in at the close of yesterday. So this is
Yeah.
where we get in. I'm not looking at the hour chart for these entries. I'm not looking at the 5 minute chart for these entries. So this profit is the whole day. You know what I mean? And I'm not saying that it always happens where you can grab a big day, but the better your entry, the better the exit. So this is where we
Oh,
get
I
in.
see what you're saying. Wow, you just made a lot of things make sense to me now because when I was looking at the day and the weekly and the monthly, I was trying to figure out how it all goes hand in hand. But now you just explained it to me, so you can just keep it. But of course, you have to have a good ratio, right? So you don't blow out your account. But you could just keep it running for the whole day and catch piss the whole day. If it's showing, and that's the day chart that you're looking at.
This is
So
the
it's
day chart.
showing that the market is rising that whole day. So you know you're good that whole day to keep
Yeah, I
it.
don't have to check this trade. And as we progress their profit, and even if the market moves, I want my risk to be locked in as a
Wait. Excuse me. Wait. I just thought about something from what you just told me with trading the day from the daily chart. No, you would let it run all the way to the top. Because if the daily chart was telling you that it was up, you would keep it going. What am I saying? You would keep it going. Am I correct?
actually, how many positions can I open on this? How many positions can you open on your account? Who determines that?
Me?
Exactly. Now, to your point, risk has to be right. We don't want to just open up 10 lot trades and we have $1,000. That's just reckless. But let's just say, for instance, just for sake of clarity, you have a $10,000 account. You're opening up position size. When I've determined this is my style, doesn't work for everybody. When I've determined that I have an entry trigger, I will open multiple positions. So what that means is not only do I have a runner, so one that let's see, the market came from
Yeah.
here. Let's see. At this point, I don't care. You know what I mean? Like I can put a stop on that and let it run to wherever it's going to go. Ideally, what goes up must come down. So yeah, we can target this as an idea for where it could come back to, but we eat. So we would lock in that profit with one of the positions. So I'm going to close out one of the positions based on my first target. So let's say it struggles. Let's say my second position, we get up here, it starts struggling. Guess what I'm going to do? Close it out. You know what I mean? Let's say it goes up to here. Okay, the third position that I had open, now I'll close it out. So, but you make those decisions based on market sentiment. This market could totally turn around. The reason I was able to get a third position is because it pulled back during the day, and so that's what people don't see. They see this day and they say, "Whoa, that's up," but I'm about to go open a trade. What happens to those people is they get trapped and get set up and put in position for people like me because they bought. The market's going to go down. They're going to start selling
Mm-hmm.
their positions. The price is going to get cheaper for me to get in and buy again and then to take it back up to where it came from. So let me show you. On this, again, the market pulled down during the day. Keep in mind, I don't really look at the hour chart. I look at the daily to tell me the story. But I can tell you that during this day, the market pulled down. So let me clear all this off because we don't need it. And let's just focus on the day. So we'll switch to the hour chart. So this market ran up to here,
Mm-hmm.
yeah, during the day. And it's probably when people start looking, oh, it's going up, it's going up. They start loading up their buys. It's what happens every single day. It's how the market moves. Loading up their buys right here. They pull the market down, scared them out of their trades, took their money. Because if you got in up here, if you were overwrit, or you most certainly probably closing it out right here, got in here
Hmm.
again on a buy because this is a better position than getting in up here, right? And then boom, we out here. Keep it going. Another engulfing candle on the hour. So boom, if you wanted to wait, give yourself extra confirmation, confluence, whatever you decide that word means, you're entering here as an aggressive entry. So here's just repeating that process over the hourly to determine that. I'm right here and I had already gotten in right here. I saw the market pull up and I waited on it temperamental to pull back down. I don't know how far down it's gonna come.
Yeah.
And guess what? It could have not pulled back down and it could have kept just running up. But you can see where just this top level, that's where it went up to. And then this is where
Hmm.
it came down to during this same day. But you can't see that now. You know what I mean? So those are the tricks that they'll, so you know what I mean? Somebody coming to this fresh, what time is it? It's 1 p.m. They're ready to trade. They ready to get in on the buy. They see it's been going up all day. Now they're anxious and they like rubbing their chops. They like, okay, buy. Guess what'll more than likely happen? They're gonna pull it down. It's a game. And then we'll see what happens tomorrow. So on this trade, I can move on, boom, bam, go on in my pipeline, and then I
Yeah.
can just load them up when they're ready. Because that's a timing thing too. Everything's not always tradable. You might come in here and be like, USDs are ready to go today, but now I gotta wait on this one. Okay, boom. I'm gonna put that note in there. Mark your charts up, all your notes, leave them on this trading view. You know what I mean? Not don't
Hmm.
still have your. I'm just saying keep them on your chart because you can. But I hope that this is vacation. And keep in mind, bro, you can book we can book time and we can look more into it. I do think based on what we talked about though, I want to show you because we just dropped our new lectures and I think that based on what you shared, it might be a good fit for you. I don't know. We'll see. But we'll talk offline about that. But um just so you know, we consultations. We can set up a trading plan, me and you. If you feel like you need more training, if you're ready for more training, trust me, so many levels deep. Market structure. I could teach you how to read a chart, naked charting. We have advanced naked charting. We have advanced market structure. We have price action. I'll just show you. Hold on, give me 1 second. I'll show you. We've been migrating to a different platform to get all that stuff.
Well, I learn something every time I talk to you, so I'm definitely I'm all in. I'm trying to I'm just trying to up another way to the top, you know, another stream,
Absolutely.
and this is it.
I think it's the
It's a no
best.
brainer.
Man, there's no other business like trading to me because once you get it dialed in, it's the best thing. I mean, like, you don't, it's the best thing. It's literally the best program or best business to be in. Quick share tab.
But hey, T, I actually I gotta go pick up my little sister real quick and give her
All
a
good.
ride.
We'll connect later then.
Yeah.
No worries. All good,
Okay.
my
Yeah.
friend.
Uh,
But
hey,
I'll send you.
I need another one-on-one. You hear me? Because I gotta get this right for real.
Yes, indeed.
So if
Yes,
you got some
indeed.
time today, I'm just gonna drop her off. If you got some more time today, I'll get at you on the phone too. But if you got some
Yeah.
more time today, that would be perfect. Just you know, just pick my brain some more, see what I know, and try to mold me really. You know what I mean? That's you gave me some great information today with the bars and how to set up and determine what the market's doing and paying attention. Really, you showed me that it doesn't matter if the market breaks out or not. You can look at the market and still catch pips. You just got to be paying attention to the patterns and the obvious patterns like a doji candle or something like that will let you know. Of course, if you use indicators and stuff too, that can help too, but you don't have to.
Exactly. I mean, you don't have to. Some of those things make it easier to see the market. But again, it really just comes down to basic price, understanding price, and then leveraging that. So We have live training later on, so maybe not today, but certainly we can reconnect and get a meeting on the book so we can talk more. And but I'm loving your progress because I know when we first talked, I'm loving that. So keep
Yeah, I
going.
didn't know, I didn't really know nothing, but I read that Candlestick Bible, so I do
Welcome back to another video. I am TL Turner. We're going to talk about our arch nemesis as traders, which is the topic of drawdown and how to survive drawdown. Now, not only that, but I'm going to show you one of my favorite tools to use in TradingView to help me with the process of walking away from my charts with confidence. So let's get started. What I want to let you know is that I understand that facing drawdown can be tough. Okay, it can be very, very tough. It's a little bit like wading through thick mud when the market just isn't ready to move in your favor. Sometimes it causes you to feel tired or mentally drained, and it can really just weigh you. Drawdown isn't just about hanging in there. It's about staying focused and sticking to your plan and then coming out stronger on the other side. So, the main thing with drawdown is just a part of trading. It happens to everyone, no matter how good you are. Okay. So, this isn't a sign that you're not skilled. It's crucial to accept that if you want to keep your mind clear, because it's so easy to get caught up in your emotions during drawdown. You might start doubting your strategy or feeling overwhelmed, but just keep in mind that drawdown is temporary and it can actually help you to succeed in the long run. But that's the first step to building your mental strength. So, one of the things that I've noticed sometimes is that trader fatigue is a real thing. Okay. It'll show up as a lack of focus or irritability or just feeling foggy about your trading decisions. And when drawdown lingers, it can feel like a tough fight between both the market and your mind. So to beat this fatigue, it's important that you stick to your trading plan and embrace the discipline that got you into trading in the first place. So every successful trader has been through drawdown. Let me say that again. Every successful trader has been through drawdown. So it's not about the setbacks. Understand that. Trust me, it's about how you bounce back from your setbacks. So sticking to your plan, having discipline is key, because when you're in drawdown, the urge to abandon your trading plan can be very strong. So you may want to make impulsive trades to try to recover or try to offset the losses. And that's a dangerous path. So instead, what we want to do is focus on your process. Okay. A solid trading plan is like a compass. It's going to keep you on course even when things get rocky. So, one of the things that I'm going to show you here is the power of using alerts in TradingView. This is a fantastic tool and feature to help you to set alerts for important price levels or pivot points that match your strategy. So this is what lets me or lets you step away from your chart and reduce the stress and giving you that mental space to reset. So by using these alerts, you can take a break from constantly watching the market, and instead of sitting at your screen waiting for things to turn around, you can walk away. Okay, so you'll get notified when it's time to check back in. So another thing I would recommend is embracing patience and mindfulness during drawdown. Patience isn't just nice to have, it's essential. The market will move at its own pace. Trust me. I'll say that again. The market moves. Techniques to keep calm and clear headed are going to be beneficial to your trading success. This is the Currency Manifesto, which is the ultimate guide to accessing flow while trading. So I encourage you to try meditation, try deep breathing. Sometimes I even will take a short walk to recharge. But this mindset helps you to see the market more clearly, will keep you focused on your long-term goals,
rather than getting sidetracked from short-term bumps. All right. So remember that trading is a marathon, it's not a sprint, and drawdown, surviving drawdown can often lead to growth and profits down the road. So keep your perspective and you can navigate the tough times of drawdown with strength. So, again, survive and drawdown is just a part of being a trader. Embrace the process, stay disciplined, use the tool like the alert tool. I'm going to show you that here in a second, and make sure you keep your focus and your perspective, and you'll come out of that drawdown, but not just okay. You'll come out stronger and more prepared for your next trade. So persistence is going to pay off huge in trading, folks. Remember that. And how you respond to the ups and downs of trading is what really matters. So stay the course, and eventually the market will align with your vision again. So we're on GBP, Canadian dollar, British pound versus the Canadian dollar. And what you'll see here is this is our trading plan. And during this time, I'm going to highlight this because we can shoot to the 1 hour. You'll see here from where when the market closed yesterday, and keep in mind this order was triggered just because of this level here, especially because of spread and all of that. So the order was triggered, and we were in drawdown all the way up until about 3 a.m. this morning, Central Standard Time. And so you can see how even though the market almost went all the way up to this level, this is where I have my alert set up, okay, just according to the plan that we created. Chart, or when you have a, like we use the short position tool here, when you are on that line, the horizontal line, you can click that icon there. It looks like a little bit of a clock. And I switched this to crossing up, okay, because I'm in a sell position. So I want it to alert me if it's crossing above that level. All right. And then, of course, I'll get notified by email. And then also I will get notified in the app. And also it'll it'll make a sound in the app. And you can change all that here. So this is one thing that I use to help me to walk away and not just constantly be stressing and watching the chart. And so once you have that set up, you just hit save, and then boom, you're done. You're off to living your life as you should. And even though during the Tokyo market was all the way up here, it didn't trigger this alert. And so when I woke up this morning around 7 a.m. Central Standard Time, if I didn't get an alert, then I know, well, either the market is probably still in the same area or it's gone down, right? So that's just basic logic. Hopefully this video helped you tremendously with understanding that drawdown is a part of the process. Hang in. And I wanted to show on the YouTube channel, we did a little bit of a deep dive on using Renko for trading gold. And I wanted to bring that same content to TradingView and talk about how I use Renko to help to determine if you've been struggling with support and resistance or finding. This is going to be a tremendous help to you. One of the things I used to struggle with is support and resistance, and how it always seemed like the market was at support and resistance. And it was difficult for me to say, okay, am I drawing it on this level? Is this where support is? Is this where it was confusing? And so one of the things I used to use line charts, but even that, depending on what chart you're on, where do you put it? Like, look at this. Where do you put support and resistance on this line chart? So let me just show you, and I'm going to share with you the box size that I use for gold. And we may look at, I'm currently in a trade on platinum on my live account. So, and this is my first time trading platinum actually, but some of the same, I'll say this, some of the same, some traditional technical analysis is just BS, but some of the same concepts as far as pivot points, as far as, let's say, candlestick patterns like double tops and things like that. And I'm going to show you how trading or using Rinko, you're able to see those double top patterns a lot more clearly. So let's switch over and I'm going to show you my exact box settings. Now, just so you know, with Rinko, you have the option to do ATR, which is your average true range, or you can do traditional. Okay. And so average true range, keep in mind, even though I'm on the daily chart, these are not daily bricks. Okay. So even just to zoom that in a little bit. So this is the brick that I'm hovering over, and these are called bricks. It's no different from candlesticks, right? If you want to see the extensive explanation, so we can see here where this is September the 19th. This is September the 23rd, basically Friday to Monday. However, August the 16th. Okay. So Rinko does not take time into the equation technically. Okay. It's looking at the overall price movement based on either if you're using ATR or technically ATR and ADR are similar. ADR includes gaps, ATR does not, but the average true range for that pair over a given time, what it's going to do is it's going to automatically calculate your box size based on the nine last periods of price action, right? So I just prefer to use a traditional box setting that I set up myself. This is my box setting that I use for trading Rinko with gold. And like I was mentioning, it's much clearer where you can see these levels versus leaving the candlesticks that are up to interpretation. Is this a hanging baby? Well, hopefully you don't hang babies, but is this an engulfing candle? Is this a da 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 da? It's like, okay, well, we can clearly see that the market popped up from here. And if you like this content, definitely make sure you follow me on here on TradingView and boost this idea, because I'd be happy to bring more tutorials and more training content like this to TradingView. But so we can see here clearly this market rested and it went here. Very clear. Very clear. To determine what direction the market is in, easy peasy. It's going up. Yeah. And then let's just say, for instance, you said, well, this is a level. Came here twice. Boom, boom, boom. Right? Went up. Now, what the point that I was making, and you can kind of see it here, but I'm going to use this area here. So doesn't this look like a double top, double bottom? Pause. Went up, came back down, double top, double bottom. I don't know. I'm saying double top. I'm saying double tap. Yeah, off of this same level. It just showed it. It just showed the level, and then boom, you're into a trade. And in this instance, you could use a 1 brick stop. You could use a 2 brick stop, depending on the pair. Obviously, commodity, whatever you're trading, using Rinko, ideally, it would be like a 1 brick situation. Now, one of the cautions I would give anybody if you've never used Rinko and you're trading is to make sure that you minimize your risk as much as possible anyway, right? It's studies show where technically if your account is under a certain amount, let's just say your account is under $100,000, studies show where sometimes you're missing out on trading opportunities because you're using too large of a lot size that will stop you out in this case, and then you miss out on other opportunities. So the point being, in this situation is where, let's just say we saw that double tap off of that level. It's very clear. It's a psychological price level. It's obvious. Let's say we were to switch it to a line chart. Let me sneeze real quick. Okay, it didn't want to come out. Let me see if it's going to come out. It might. Anyway, so switch it to a, we'll switch this. And so this is the other thing, is trade planning is very straightforward with Rinko, because once you have your bricks, you can easily say, okay, this is a level that I'm going to enter on, and let's switch it to candlesticks, and then boom, you're in the trade. Now this market came back, touched this level, did not close, and so you weren't in a drawdown, right? This is the level, came back a day or two, touched it, popped up, going from basically, let's call it $2,350 all the way up to 2471. What a trade! What a fantastic trade! And then how many days was that? We'll just count it: one, two, 3, 4, 5, 6, 7, 8, 9, basically 10. And so that's one of the ways. I know sometimes I'll post on my YouTube channel that I've been in a trade for 2 weeks or I've been in a trade for a month. And this is how, because Renko allows you to really see the overall trend. And if this is continuing to make boxes higher, why am I getting out? Even here, it's like it pulled back. And let me just highlight that we'll just look at that on the candlesticks. And I'm not here to say, convince you. I'm not here to convince you to use Renko. However, if you're struggling to find levels, Renko could be your saving grace. So let's just look at that. So even still, on the days that it pulled back, it re-entered. And even if you said, well, I'm going to re-enter once I get my brick here, right? So that would be at this level. And I teach how to use these to actually get in. So 2450, let's say you got back in right there. And let's just say this was the candle or this was the day that the law has made. Let us rejoice. Boom, you're back in the trade at this level here. You could have gotten in here basically. And now you're still in profit. So this is how you really maximize your trading. Hope this helps. And like I said, if you're interested in learning more about how to use Renko, definitely like the video, boost the video, and leave some comments. Have you ever seen Renko trading? Do you think that this is easier? Do you think this is more complicated? I don't think that it's a standalone strategy, but I definitely see the value in helping traders to find levels that are more relevant and levels that are actually going to be, and leave comments and dislike it. I don't care. You can voice your opinions. If you're like, I hate Renko, it's ugly, I want to hear from you. So hope you have a fantastic trading week. Until next time, take care.
To talk through the trade on UK oil. This was the first time I've traded UK oil. And this plan here was based on a couple different factors. So with this particular candlestick projecting from this level after having retested this area and the market going up and quickly coming down, one of the things that brought my so when we go to the Renko chart, it's probably 50 cents, yeah. So we had the Renko set on 0.50, and the entry was just based on a reversal pattern because initially, of course, let me actually show you on this candle. Okay, so it would have been all the way down there. So initially, this candle would have had red bricks or bricks all the way down here. And so because they didn't close, it was just a projection. We set up the trading idea based on that, the reversal pattern, right? And so technically, based on trend trading, once we get a third brick in here, then our new plan would take place to participate in a buy. And so the market would then be, this would be the next. So that would mean that these three for the day closed in the area that they closed or that they are projected to close in and are then solid, and then we would set up a trade based on the trend changing. And I mean, clearly the market going up, and this level here, if we look at it from like a W perspective, a macro W, the market came all the way down here to test this area before going higher. So that was a part of the confirmation, is seeing this W formation. And then if you kind of see, it's a little weird because if we just split this market down the center, with this leg being higher, what could happen is we could have a little bit of a prompt up, then a retrace, and then go up, and then another retrace before going higher. So we'll see how the market plays around these levels and mirrors this activity on the other side. But just looking at it, it was very interesting to see. So that was the one of two winning trades that we had today. We took a trade on oil as well. Similar idea. Let me just kind of see where oil came down to, because they were similar setups. Still in oil. Oil came all the way down. I'm going to move this because we don't need this level. Came all the way down here. And so I'm guessing on the projection bricks, if we were to go and look at that, then it would be similar to what we saw with UK oil. So same thing, was all the way down here, and then yesterday it pulled off of that. So again, the entry, and we could reversal pattern showing that it was going to go higher. And let me check the entry, and I could tell you exactly where we got in. So on oil, we got in at 73,592, 73,738. So, oh, we got a better entry on this one. Yeah, that was good. 73592. So somewhere in this area here. Let's put that level on there. And show you on the candlestick chart so that way you can see. Okay, so that's basically where we got in on oil. So both of those trades are performing quite nicely. And then silver and gold obviously return to these levels. Now this could be a situation where it turns over. So what we'll more than likely see, I'm going to switch to, yeah, see, I'm not all the way convinced that it wants to go up, especially because our brick setting on this one is 2.5, but we don't know yet. So see how this looks like. Okay, well, if it's coming up here to retest this and then turn over, we'll see that tomorrow. But overall, good day on oil and, well, UK oil and US Bitcoin. Oh, this should be 500. Okay. So we're just waiting on that to see if it's going to continue, and then this would more than likely be the first target. So 58,500. All right. Trade safe.
So, making this video just as a part of an accountability piece where the importance of believing in your trading ideas or trading plans. And sometimes I don't always get it right, where the market may reverse and I'll close out of a position because I don't want to risk too much. And this is a prime example of the market doing that. And sometimes it happens where the hour, the minute, the next 30 minutes after you close out the trade, because the market went in the opposite direction, it'll turn around. So this is a trading idea that we had on NZD, Euro NZD. And let me pull up, while I'm doing this, let me pull up, because my entry was pretty much spot on this trade. And this morning when I woke up with this account, I was down approximately 1% overall. But let me see here. So the positions were at So we opened at 79,241 and closed them at 485. So let me just kind of put that on the 79. Basically, where that is, 485 is where we closed. So I'm going to put that on there. 485. So, oh, does that make sense? Let me make sure. Open 79241. Oh yeah. So I had some pending orders, and sometimes what happens is if I have a pending order and it gets triggered, I don't always like that. And I know that may sound weird, but I don't always like for it to get triggered during the Asian session, and so I had pending orders that got triggered. It should have been triggered around 250, but with the slippage, it got triggered at 279. Well, 1.79241. And then when the market came up here, and we're going to look at the hourly chart. Let's see here. So we closed out in 6:52 my time. 6:52. So yeah, basically, it's like the market still plays these. No matter how long you've been trading, it'll you still get caught up in that game sometimes where you get. I don't want to use the word tricked, but it's a matter of liquidity. Let me see. Let's see what the open time was. 1 a.m. So it got triggered. Yeah. So it got triggered during this candle, and I when I set up this trade yesterday afternoon, I always like that because sometimes I don't like for it to trigger until London or maybe New York, but it triggered during the Asian session, and technically right now it would be in profit, but when it got to here, I did close it out during this time because it looked to be making a reversal move, and then looks like she's the next hour after it turned around. And so it's like, man, how do you one that happens, and you don't always know when it's going to happen, but two, when it happens, it's hindsight. It's like, yo, I could have just waited about an hour. And I don't think experience or length of trading will help you to avoid or not have those days where the market may reverse and then turn around. I don't think that goes away where you'll be in a trade and the market might go and grab liquidity and then you close it out and then it turns around. I think the error that I made in this was not keeping my eye on this when I don't like to manage too many pairs at one time. And so I was already in two other trades. So on a different account, I was in two other pairs looking at. And so that was a part of the decision making, is that I didn't want to be keeping an eye on too many different pairs while I was looking at this. So different accounts I'll run different trades on, and I didn't want to be too far removed on the pairs that were on this account. And then overall, the negative equity was about 1% when I closed the trades out. And that was a part of the decision as well. It's like, well, I had already set up that risk in my mind and say, okay, today, only willing to do about a 1% loss on that particular account. We're up about, well, it would have been 5%. Now it's like 4% on the week on that account. And so that was a part of it, but it just always makes me laugh when the market does that, because obviously hold happens and it still happens, and maybe one day it won't. Maybe one day I'll be like, nah, just hold it. And sometimes, I mean, it's better to be, I don't like saying safe, but it's better to be cautious than sorry, right? Because typically I don't trade on Fridays, and my best days trading are Tuesday and Thursdays. And so this trade would have just been more of a bonus trade where whatever profits were made, I just would have withdrawn and paid myself that for the day. And so it's like I would rather be conservative and close out the positions with a 1% loss and cautious, right? I'd rather be cautious and conservative versus being wrong and cutting a loss at 2%. So even the position, the sizes of the position, it wasn't that large of a size, but at the same time, overall, like I was saying on that account, I didn't want to risk more than 1.5% today. And if I would have gone and done something else, and then the market continued to go up, that would have not been a part of this plan. So it's like having this plan on here is good, but here's the problem that I made with this trade, and this is something that perhaps it can help you along the way. Is even though I had this was a daily trading idea, like I based this on the daily chart. I was managing it on the hourly, and so that's also just a point of I don't, like you said, sometimes I'm distracted or I'm not getting it right, or life happens and we get kind of knocked off our course. But typically, the way that I trade is I allow the day to close before I make a decision on what to do with that trade. And so, with that being said, um, closing this morning during right before the New York session opened was technically a violation of my trading plan. And so, hey, it's like missing I equate it to sports where it's like it's no different if Steph Curry shoots a J and he bricks. I mean, it happens. He's going to miss some of them. So hopefully you can learn from this rookie mistake. Managing the trade on the time frame that you set up the idea on and continue to manage it that way, which is something that I typically do. But for whatever reason, this trade, I neglected that. So stay safe out here in these trading streets. And I, like I said, I would avoid managing trades on alternate time frames if you got the trading idea on a higher time frame. So meaning, if I'm on the 4 hour and I'm doing all of my to base the decision on getting out of the trade, because it's only going to cause more anxiety and more confusion, because now you're like, okay, what is happening on the 15? Is it gonna? And then now you're flipping back and forth. So just a word of advice. I made a rookie mistake today, but hey, at the same time, it's just getting back to shooting my three and getting back out of the way. So the other trades that we were in um, were you. And so that's what I was saying. It's also not a bad day overall. It's just on that one account we were down. This was the initial entry and the exit on that one because that was just a quick trade, and I believe that was it. That was it. Bitcoin is going up to that and turned around, but I believe that's going to go higher from what I can see, but it's not ready yet. So happy trading, happy Friday, or it's 11:56 p.m. in Ho Chi Minh City. So shout out to all my folks from Vietnam, Xin Chào. And then what about
We will be discussing and going through all of these pairs to identify levels of support or resistance, or some people call them pivot points, levels of interest that you can use to forecast which direction the market will be going in. Now, for this particular training, we will be using one of the best kept secrets in technical analysis, which I believe to be the Renko chart. Now, if you're looking to make this happen, of course, using TradingView, in my opinion, is one of the best platforms to use. You can get the Renko template for MT4. However, using TradingView, it's already built in. And so, first off, if you're wanting to do this for whatever currency, commodity, stock, whatever you're looking at, one of the things that you need to be aware of is that with the Renko chart, there is what's called ATR and also traditional box setting. And so, if you're looking for the box size to be automatically calculated, you can put it on a figure like ATR 13 to give you levels of interest. Okay. Now, personally, I will use different settings for different currencies. However, just for the sake of time in this video, we will be using the ATR 13 box settings so that it automatically calculates the sizes of our boxes. Okay. Not only that, but we will be, just to recap that, so when you come into Ringo, it'll be traditionally set up on, and like I was saying, alternatively, as you increase your knowledge or you drill down to certain pairs, the traditional box setting may be more beneficial. And so, what we're going to do together is we're going to go through multiple pairs, all of these, and some of them may have other levels on them. So, we'll cross that bridge when we get there. But we're going to go through multiple pairs and see if we can identify pivot points. Now, for the conversation of pivot points, we are looking for swings where the market touched a level more than once. Okay. And so this area here, seeing as how if we were to start our charting from here, seeing as how the market came down, it touched off of this level twice. And so that would be a pivot versus the USD dollar or US dollar. This is the Coinbase chart. Now, notice sometimes one of the things that happens is depending on your broker, the chart could be totally different. So, when I go through these pairs, I'll let you know which broker so that you can match up the levels. All right. And so, starting with Cardano, we can see right here how this level was tapped twice. And so, we will put a level there. And even though we're starting with September the 21st on this particular chart, if you, when you're going through and doing this with your own, in your own back testing, you can go back as far as you want, right? So Cardano, we're going to start here because we can obviously see that this is a level that the market touched twice, which is approximately um, 2.3891. All right, and then we're going to drop down and we can see, let's see here. So this level was touched here, and it was also a reversal point from here. So we'll draw that in. And once we get to the end of the pairs, we're going to really see how these levels will play out not in history, but in the future. Okay, so we can see here the market fell to this level, popped up, and it came to this level and reversed. Now, some technical analysis traders may find that putting this level here is more beneficial, or they may want to add that in. Understand always that these pivot levels are swinging levels, and based on this area, this would be more relevant because we could see where when the market fell below here, it touched this level, broke through it, rested on it, and went higher. Okay. And so we may also look at this area as the same thing where the market touched here. Okay. It reversed from this level. Okay. So we'll put one there. Okay, and we will move right along. Okay, and so looking here, the market rejected all here, reversed and then it became relevant there. So we're going to put a level there as well. Okay. So keeping in mind that we would like to see at least 2 points of touch. We have a level here where this came to here, and it also reversed from here. We'll put this level here to split the difference. And in a compound area like that, you see where we're using the chart to give us the most relevant area, right? So we have technically 1, 2, 3, 4 tabs. Alternatively, if we were to put it here, it would technically be 2 tabs. Okay, so we're just going to keep going. Now, in some cases, it is relevant to look at when you have a large swing, right? So if this is considered to be a large swing depending on the pips or the movement, sometimes it is good to pay attention to that, but we're just going to keep moving forward with looking for levels. So this would be an interesting level because the market popped up from here and came back down, and then when it reversed, it went through that level and then did a bit of a reversal. So that Renko does not take time into the equation, and for that reason, it is important to understand that these bricks are being painted. When you're going through, you will see, okay, this jumps from the 20th to the 21st. So these bricks don't represent a day, even though we're on the daily chart. So just keep that in mind as we're going through here. So this would be a level. I can see where the came down to here, okay, which because we had a bit of a reversal off of this level, we'll put that, but it did double tap here. So we'll put that level in. Okay, so we had a double tap there. This level is obviously pretty powerful here, so we understand that. And again, just noticing that we operate on a swinging scale, then this could be already a level of interest. Now, the good thing about these levels is once you have them on here, you don't have to redraw them. You know what I mean? So this could in the future be an important level. So it really just depends on um, how precise you want to be with your levels. But I can see in here where the market fell from here to here, reversed from here, came back down, popped up. And so this is definitely a level that we want to have on our chart. Now for the remaining levels, I may not do as much talking depending on the currency or the commodity, but we'll continue to go through this together. Okay, so this level here, considering that the market did fall to here, but this is a level where it's literally one box, and so we'll just put it here. One of the things that helped me when I found Renko, it just helped me to identify levels that were biased to the market versus levels that I was biased to. Okay, so sometimes when we're looking at support and resistance, we're like, oh, this looks like support or this looks like resistance, and so I was putting a lot of my own biases on what the levels were and giving a lot of emphasis to certain candlestick patterns and just doing a lot of editorializing for charts. But what I love about Renko is that it leaves no room for that. It leaves no room for adding any sort of editorial language to a chart. You don't have to say, well, this level. And so once you have these on here, okay, you can switch back to the